We'll move on to Louise Beaumont from Platform Black.
Right, hello, thank you very much for joining me here on a Tuesday evening. Platform Black, we are, as Eddie said, a working capital platform. It was launched by myself and a guy called Chris Shaw and a guy called Colin Levins. We had all run businesses and we had all had times of the month where we needed more working capital than we had. We didn't like the traditional invoice finance products. We'd found loans hard to get, we'd found overdrafts were not always there when you needed them. So we basically wrote a list of all the things we didn't like about traditional invoice finance. We thought, there's got to be a better way. Through the power of the internet, there has to be a better way. And so we came up with Platform Black. What I will do is give you a bit of an overview of what that is towards the end, but I thought just for some scene setting, it might be useful to give you a kind of an overview of alternative finance. And the first question, of course, is why do we have this thing called alternative finance, or as Eddie calls it, probably more correctly, new finance? Why do we even have it? And the answer, of course, is this is a consequence of the financial crisis. Basically, the banks got overextended, asset-based lending damaged the banks, and now the SMEs are bearing the brunt of it. That's the basics of what happened. Credit crunch happened, SMEs now seriously exposed. The banks used to have quite a generous, fairly scattergun approach to lending. They're now much more in the cherry-picking category. They prefer mid-sized companies, they prefer higher credit ratings, they prefer older, more established businesses. So, if you're a young business, or if you've got an innovative business model, or if you are not yet well credit rated, you're really stuffed as regards traditional sources of finance, by which I mean the banks. The banks want to take more security and more collateral. That's a problem if you don't have any of those things. They also are a bit iffy about intellectual property, and so what they really like is lots of collateral from your business, so they'll take a charge, a debenture over your business, or a personal guarantee over your home. So that's the way they like to work things at the moment. All of which means that credit is much harder for SMEs to get access to, and we're looking down the barrel of a really enormous funding gap. So a guy called Tim Breeden, who's the chief executive, ex-chief executive of Legal & General, wrote a report called Boosting Finance Options, catchy title, a couple of, 18 months ago now, I think. And what he identified quite rightly was there is this huge funding gap opening up for SMEs and mid-caps actually, because the banks just can't lend to these people anymore because they've got capital and liquidity requirements, so regulation came in. The size of this gap varies depending on which bit of the report you're looking at and when you think it's going to come in. Anywhere from 60 billion to 190 billion worth of money is going to be required that ain't there if we carry on the way we are right now. Hence the growth of alternative finance to fill this gap. So the basics are, credit crunch came in, new regulation came in, and it is this regulation for capital requirements in the banks that are making them effectively stingier. So overdrafts are harder to get. They're also, if you happen to have one, you lucky sausage, they are now being reduced and withdrawn. That's the experience. It's also affecting term loans. Commercial mortgages are easier to get than anything else right now. Mortgages are easier to get than anything else, but it's affecting overdrafts and loans particularly. There's also, you'll see this fight every time any new numbers come out from the Bank of England or from the British Bankers Association. You'll see this big fight where the banks are saying, our doors are open, and it's just the SMEs not applying, and then you hear from all the SMEs who have applied and not got any money. And the answer is it's a bit of both. SMEs aren't applying because they think they're going to get turned down. And there's also a risk in being turned down for a loan or an overdraft, and that's that it hits your credit rating. That's a pretty powerful disincentive. So, huge funding gap. And of course, Basel III will increase that gap. If you happen to believe Xavier Rollet, Chief Executive of London Stock Exchange, it will KO, knock out, completely total SME lending by 2017. So we need alternatives. So plan A, traditional finance, a bit sticky now for SMEs. So what is the plan B? Well, the plan B is non-bank providers of debt, of equity, and of working capital. Particularly focused on the SME marketplace. Effectively, my definition of it, I'm sure Wonka Business and Iwaka might disagree with me here, but my definition of this is that it is bringing new sources of money into the marketplace. We'll see. New sources of money, money unlocked from high net worth individuals, money unlocked from family offices, from funds, money unlocked from cash-rich companies, money unlocked, we have a cash-rich charity investing on Platform Black. Also, we have some money coming in from asset-based lenders, and would you believe it? Banks. The irony. So, this is new sources of money. They can't make money anywhere else. Your money, if you're a cash-rich company right now, is losing you money in the bank. Ditto if you're a high-net-worth individual or a network. So, new sources of money, access to with us, a new asset class of debt. So, you've got broader funding choices. You have options. This puts you in the position of having to make a choice, and which makes me in the business mostly of education. There's a huge knowledge deficit, never mind anything else out there at the moment. So when you're talking about alternative finance, you can include in that peer-to-peer lending platforms, invoice trading platforms, crowdfunding, anything that unlocks new sources of money. So the key features under this definition are that the crowd replaces the few. And this is where, basically what I mean by this is that you're talking about creating competition. You're talking about creating a place where people who want to sell, in our case sell invoices, auction their invoices on our trading platform, are creating competition for this asset. People compete, whether they're high net worth individuals, whether they're funds, cash-rich companies, whatever they are, they compete to offer these SMEs finance. So the other typical attributes of these types of platforms, much greater flexibility, no lock-ins, no early repayments that you have to pay if you want to get your money back, no debentures over your business, no personal guarantees, much greater flexibility. With us, what you get is pay-as-you-go, cash flow on demand. Use it when you want to use it, pay for it only when you use it, you're in control of all of your costs. They will never be more than you expect them to be. So, as I'm saying, much more transparent fees and terms. Anybody who's had to battle traditional invoice finance will tell you they never, ever really got to the bottom of what they were being charged and how that was constructed. Traditional invoice finance, you will pay registration fees, annual fees, fees for using the service, management fees for not using the service, fees for extending the service, fees for terminating the service, and for the pleasure of all of these fees you will take adventure of your business. So this is alternative finance providers tend to be a lot more transparent, and if they're not alternative. So, kind of access all areas, you will find alternative finance players in all of these areas. You'll find them in equity, so Seeders, Crowdcube, for example, good examples of that. You'll also see them in working capital, we're a fine example of that. And you'll see them in term loans, so Funding Circle, Funding Unite, Thin Cats. So there are lots and lots of different platforms out there, and you'll have seen, if anybody's had a chance to read the new finance document, there are lots and lots of companies cropping up in this area. It's hugely fertile. But let me remind you, there is a lot of market to go at. There is a gap of 190 billion projected by 2017. So there's a lot of demand. And it's funny, when banks tell us that there is no demand, people aren't knocking on their door, I can tell you there is demand. We're advancing about 3 million a month at the moment. And that's up on 2 million a couple of months ago, and that's up on, you know, 1 million the month before. I mean, there is a lot of demand, and it's ramping up very rapidly. So there is demand, there is need. With everything come provisos, and I think it's really important to remember some of these provisos when you're looking at alternative finance. One of the reasons why there are all of these different platforms out there is it allows you to spread your risk. It allows you to spread your risk as an SME, and it allows you to spread your risk as an investor. So we have people who invest on Platform Black, who also invest on Funding Circle, who also invest in Seeders, who also invest in a number of other platforms like Zopa, for example. They have spread their risk. It could work for you or for people you know because of the flexible terms. It could work for you because the lending conditions are often a lot less onerous. It could work for you because the borrowing rates can be very competitive. The borrowing rates basically are a function of how good your business is. And in our case with working capital, it's how good your indebtors are as well. So you are kind of like the master of your own destiny. And obviously, if you're a repeat seller on our platform, you repeatedly auction your invoices, you will build a record over time, and that record will stand you in good stead. So that's why it could work. There's always a couple of caveats. Young industry, some bits of it are going to get regulated from 2014, but not all of it. So remember that, it's a young industry, not all of it is regulated. Not yet capable of lending really large sums, so hundreds of millions. You know, in single deals would be a bit stretching, a bit taxing at the moment. So it's growing, the liquidity is growing, but the really large deals would be difficult for any one of the platforms to deliver right now. Negative news, all you need is one really lousy bit of news and the entire industry can get tainted. But one thing that is really key is that government absolutely wants this to succeed. I don't know if anyone's managed to leaf through Vince Cable's vision for the business bank, but there is a lot in there about business advisory services being focused on helping companies understand their options, and about putting money directly into platforms so that it gets lent out very quickly. So there's a lot of very good stuff in that business bank kind of charter, and it's certainly a much more viable option than funding for lending, which is Merlin Mark II, really. So that's some background. That's certainly my view of alternative finance and what it means. Against that context, I'm just going to give you a bit of an overview of what it is that we do at Platform Black. And as I said, it's pay-as-you-go, cash flow on demand. That's the product. The key point here is you, as an SME, call the shots. You use it when you want to. There's no minimum or maximum amount of trades you have to do a year. If you want to use it once a year to pay the VAT bill, that's fine. If you want to use it once a week as a rolling facility, that's fine. It's whatever that works for you as a business. So you call the shots, use the service only when you want to, and you pay only when you use the service. And you control the fees. You control the maximum cost of finance for any auction. Our buyers then bid down to give you the best, the most competitive cost of finance. You're in control. You also choose the only other fee that you'll pay, which is your transaction fee. And you choose that based on whether you want to pay for 30-day money, 60-day money, or 90-day money. So it's very cost effective. It's also confidential. We don't tell your customers. If you factor your invoices, you've basically not only outsourced your entire sales ledger, you've outsourced the relationship with your customer. Your bank will ring your customers up and tell them to pay. We don't get in the way of that. We leave your relationship with your customers intact. It's also flexible. No debentures over your business. No personal guarantees. No lock-ins, no notice periods. It's just the product that me, Chris and Colin wanted when it didn't exist. So how it works, if you as a business that wants to unlock the money that you've got tied up in auctions, you become a member of Platform Black, and that means you've got to be B2B. First hint, you've got to have invoices. You've got to have a trading record where we can see that you're a good, well-run business. You're a good, well-run business, you've got good end debtors. We like to make sure you haven't got any county court judgments against you. And that we need to make sure that any debentures you might have over your business are removed if they are no longer relied upon, and they are waived, the portion of it over your book debts is waived by the bank, by whoever holds that debenture, to allow you to trade on our platform. So that's it basically. So you register to become a member of Platform Black. It's a pretty quick process. We can give you a yes or a no within 48 hours. Try getting that out of your bank. Then you set up an auction as and when you want to. As I said, you control all of the terms of that auction. You then set it live. We check it over to make sure that it makes sense. And then it goes live. So typically it'll take you, depending on if it's a simple auction, 5 minutes to set up. If it's a more complicated one with multiple invoices to a common debtor, it might take you about 10 minutes, 15 minutes to set up. You set it live. We alert our investors, they start bidding. It's a pretty competitive process, particularly if you have good end debtors, but just let me give you one example. We had one go live recently. It was a Finnish end debtor that no one had heard of, certainly no one could pronounce. And it was set live at noon, it closed at 5 o'clock the same day, and it had 84 bids. So that's the kind of competition that you can look for when people are competing for your invoices. So the auction closes, the bidders, quite often they keep their money with us because they want it to be reinvested very rapidly. We then pass it on to the SME, they get on with running their business. Our model is recourse to the seller. So at the end of the credit period that they've chosen, 30, 60 or 90 days, the seller repurchases. So our job in all of this is to have a really efficient, really effective, really grunty, powerful trading platform. And we simply bring those people who need money together with those people who wish to make a return on their money by lending it out. It's that simple. A couple of key facts. 100% of our auctions have closed. We've never had a failed auction, and we have zero default. We very, very carefully manage who becomes a member of Platform Black. We very carefully manage how those auctions are run. So it's just, you know, if you're going to lend money, default is a fact of life. We choose to measure it, you know, we choose to run a very conservative platform. We're hoping to keep that level of default pretty low. We're doing pretty well at the moment with zero default. A couple of stats. We've got, this number changes on a daily basis, as you can imagine, but we've got over 200 members at the moment. We've got over 100 million liquidity in our marketplace. Average auction size is probably around the 40k mark, but it ranges from £5,000 to about £300,000. So those are the kind of ranges of auctions that we've got. Cost of finance ranges from 0.5%, so 50 bps per 30-year period, to about 150. 150 is on the high end. If I looked at the platform today, earlier today, it was auctions closing out at 80 bps, 90 bps, 120 bps. And the 80 and 90 are the ones who've repeatedly auctioned on the platform and are known and trusted by our buyers, so they know it's good, they know they're going to get repaid. We charge a transaction fee, that's how we make our money, and it's either 50, 75 or 90 bps, depending on how long a period they've asked for the money to be advanced. So as you can see, it's a scale model, and as I've also said, we're advancing about 3 million a month at the moment, so it's a rapidly growing market. It's also one which is not geographically constrained. Our end debtors have been anywhere on the planet, mostly. None in Antarctica yet, but we've certainly had in many other countries that we've had end debtors. But also the model scales such that we can export this business model to other countries as well. That's obviously what we look for. We look for those business-to-business companies. We look for them with a good, well-run company, a good credit rated. We have a relationship with Experian. And that's one of the things that we worked on first and foremost when we were knitting our platform. And it was to get credit ratings pumped live into our platform, which really helps our investors assess the kind of risk-rated return when they make their bids. As I said, no cancelled judgments, no charges over the book debts, and good quality debtors. We do everything on a case-by-case basis. That's how we manage to have good quality membership. And as I say, we can turn people around in 48 hours. We had one company that I think had been kept talking by their bank for about 3 months. They expressed an interest in becoming a member of Platform Black at about 4 to 5 on a Friday. We had them up and running as a member early the following week, including getting a charge over their business waived. They ran their first auction and had £40,000 in their bank account by noon the following Friday. So that's how efficient it can be. Why companies use us? Well, there's some examples here. I think I'll pick on Magna Carta, because Magna Carta are a really clever R&D company. They make really small, really clever, really light things, and then send them into hostile environments like space. And their indebtor was the European Space Agency. And in the past, their bank had been willing to give them an overdraft facility when they needed it, because obviously, when you're making really big, really important things like that, there's quite a lot of R&D involved, and you might have a blip in your working capital. But no, the bank said, no, now we are not prepared to give you an overdraft facility. We will think about giving you a loan, but we will require a personal guarantee over each and every one of the directors' homes. And as the FD said, in what way is this business lending? So he said no, and he came to us, and so we auctioned that invoice. And we can take a little bit of pleasure when that mission to Mercury does in fact take off, I think in 2015, that we've been a very small part of it in getting that auction away and making sure that Magna Carta continue to develop those very small, very clever, very light things that were going up in that mission to Mercury. So that's an example. What they say is we can auction what we want to auction at the cost of finance that we define, quick and easy access to working capital as and when we need it. Pretty simple. So this is really for businesses that sell to business, have invoices in the thousands of pounds, sometimes need more working capital. It's about becoming a member of Platform Black, auctioning those invoices that you want to auction, and therefore having access to working capital on a pay-as-you-go basis. That's Platform Black.
Some questions.
Wait for
Hi there. Now, I was wondering how did you manage to start off to have enough investors for your first few auctions and believe in the system to make sure that the auction's cleared?
Ooh, really good question. We spent a lot of time getting the membership in place before we launched. We spent a lot of time building relationships with the people who were going to be selling their invoices, as well as the people who were going to be buying them. And for those initial few auctions in sort of June, July, August of last year, there was a lot of choreography involved in making sure that everyone was comfortable. It helped enormously that one of the first buyers on the platform was a fund that was actually used to buying this sort of asset in the States. So they'd been kind of trained on TRE, which stands for the Receivables Exchange, which had been going for about 4 or so years in the States. And they're a fund in St. James. And it seemed quite exotic to me that they were buying on a trading platform in the US. And they knew how it worked. They understood what it was. They obviously checked us over very carefully. They evaluated us based on how we selected members. the criteria, our assessment, our validation and vetting of each one of those members. And not just that, the checking processes that we put in place for each auction. And when we'd done all of that, and they understood that we did all of that, they were much more confident in us as a company. So they had experience of it working in the US, hadn't always worked brilliantly for them in the US because there were teething problems over there. But by very careful choreography, we managed to make sure that our sellers were happy to sell because they knew their invoices would be bought. Our buyers were happy to buy because they knew that the invoices, the auctions would be repaid at the end of the credit period. And that's how it worked. But thank you.
It's great. We have one more here.
Yep.
Wait.
Okay.
Hello, Richard Carmen from Pure Innovation. We develop peer-to-peer platforms. Very interested that you were saying you've got about 200 people on the platform at the moment, businesses that you're working with, and you're vetting them very carefully. What's that as a percentage of the total that have applied?
Ooh, that's a splendid question, and I'm sure it's a question to which I should have the answer. It's going to be a long answer, not a short answer, and I apologise for that in advance. It depends where we find them or how they find us as to what the thumbs up or the thumbs down is. If they come to us via introducers, there tends to be a very high acceptance rate because the introducers are either accountants or brokers or other people on Platform Black who have sold their invoices. And we have quite a few people who've become members of Platform Black, who've auctioned their invoices, who go, this is a great product, I want to tell all my friends. So if you're talking about the people who've used the product themselves and then introduce a fellow company owners, then it's a really high percentage, sort of 80–90%. If you're talking about the percentages that are coming through from brokers or accountants, it's probably at the sort of 70 or 80% mark. But remember, if they're going through the process of getting debentures waived or removed, that can sort of slow that process down. If you're talking about the people we find through our kind of outbound campaigns, it's probably a lower percentage because they're having to kind of get used to who we are, and they might make a more speculative registration. If you're talking about the people who find us on the internet, then it's a fairly low percentage. It might be as low as 10% or 20%. And that's a sort of relationship thing, isn't it? You want the people who you want, they don't necessarily need you at that time. The people who need you might not be best suited to your product because they might just be too high a risk profile for our buyer members. So, I'm sorry that was a really long answer, but I thought it was worthwhile defining where people were coming from.
Okay.
But we accept good, well-run companies with good, well-run debtors.
Should we take one more for Louise? Which one is it?
It's going to make you run now, I think. It's like watching tennis, isn't it? You can run from one side of the room to the other.
Yeah, you mentioned. Sorry, Paul. You mentioned obviously that Platform Black at the moment isn't registered. Isn't regulated. In April 2014, when it does become regulated,
we won't become regulated.
You won't. Do you think for the industry or some of the sort of parties in the industry that will become regulated, do you think they're going to become almost a victim of their own success as they become sort of more onerous to operate?
Right. The bits of the industry that will become regulated are probably those bits of the industry that should be regulated. Really easy for me to say because I'm not one of them. But the ones that are going to become regulated are people like Zopa. So they are the companies where the people who advance the funds are very much man on street. So sort of retail consumers, if you like. So yes, there probably is a level of regulation that needs to be in place there. And the Peer-to-Peer Finance Association is a really good place to kind of start, because they've been lobbying for, and this is the key phrase, appropriate regulation for quite a while. And they've always taken quite a grown-up attitude to it, saying, we know that we've got to protect the people who are members of Zopa and Funding Circle and so on. So they know they've got to do that. So they lobbied for appropriate regulation. They set up the Peer-to-Peer Finance Association. As to whether they are now going to find that regulation onerous, probably only they can say. It's interesting when you're debating this with civil servants, because their first go-to tool for how they can help is regulation. And you know, it might not be the first go-to tool for us. What we might want is actually quite a lot of stuff which is in the business bank charter, which is around getting money to the parts of the economy where it can actually do some good, making sure that business advisory services are actually capable and competent to give business advisory services, making sure that there's a balance of money available across debt and equity. So, you know, regulation is a pretty blunt instrument. If you were to ask me what would really make a difference, it might be the way that some of the tax breaks were structured would really help get more money unlocked from where it's currently sort of, you know, trapped in bank accounts earning zero interest. Thank you.
Louise, thank you very much.